Unfortunately, we have the combination of a very fragile global financial system that includes America, as well as the growing risk that Trump wants to derail the BRICS group of nations, simply because if they mature, then they will be a threat to America's dollar and political hegemony. So everything that we see in the big wide world at the moment, whether it be in the Middle East or in Europe, or the likelihood that America is going to attempt regime change in Venezuela, it's all part of this, what one really should call the global war. A war between the way that the world has been run for the last 80 years and the way that a large part of the world wants to see change. So all of that on top of a fragile, debt-ridden global financial system. First of all, my understanding is that Siberia Gas 2, it is an official contract. It's got beyond the planning stage. What are the consequences of Russia supplying increasing amounts of energy to China? Part of the big picture is that Washington wants control of global energy sources. This is a long-term plan, because if they have that, then they control the world and retain their hegemonic status. So the primary reason why America has relocated 10 warships and has activated their old Puerto Rico air base and has positioned special forces around Venezuela, it does look as though there is going to be a serious attempt at causing regime change in Venezuela, either by a show of force or else by infiltration of special forces into the country. What is very interesting is it's only very recently that Venezuela and Russia have signed a strategic alliance. So is that going to be enough to deter Trump from his attempt at regime change in Venezuela? The second part of obtaining control over global energy sources is the very strong probability that there will be a renewed and more serious Israel-American attack on Iran. Israel wants it because Iran is a hurdle towards Israel's objective of creating greater Israel. And it is also the head of the snake, in their views, because of Iran's support of Hezbollah, Hamas, and the Houthis. From America's point of view, Iran is perceived, incorrectly in my view, to be the weak link in BRICS. Therefore, dismember Iran, and you've gone some way towards dismembering BRICS. I think we're in the early stages of a long-term bull market. I'm not clever enough to say what will be the ultimate price of gold, but in simple terms, we have the DXY, the dollar index, falling by 50% by 2028. So that probably means that gold relative to the dollar will hit around $8,000 by 2028. I think the more interesting discussion on gold is what China and BRICS are doing. If you go back to 2010, when Russia and China started trading with each other without using the US dollar, and instead the PBOC, with Russia having a trade surplus, the PBOC moved the value equivalent of gold into a special vault. So that was how Russia held its trade surplus with China, through the gold mechanism. Now what is happening is that the Shanghai Gold Exchange plans to build gold vaults in member BRIC countries. One has been opened in Hong Kong, which obviously has much wider implications, and one is in Saudi Arabia. As Saudi Arabia has a trade surplus with China at the moment of around $20 billion. So what China does, whatever the level of Chinese currency that Saudi Arabia does not want to hold, they convert it into gold held in the Shanghai Gold Exchange in Saudi Arabia. And that's how trade between member BRICS countries is going to be transacted, not through the dollar, but through gold. So that brings gold back into the monetary system. And it actually goes one step further, because what China now plans to do is to use gold as a financing instrument, not just as a secure asset, so that gold can be used for trade finance, for repo markets, etc., etc. The BIS has actively opposed this for years, because obviously it brings gold visibly into the monetary system at the detriment to the US dollar. But China now has the assets and the muscle to make this a reality. So I think this is going to happen probably within the next 1 to 2 years. So the other way of looking at what's going on in the monetary system is that America is going down the route of stable coins and Bitcoin backed by a US Treasury note. And what's a US Treasury note? It's a debt instrument. So all you're doing is you're making the debt instrument look something lovely by calling it a stable coin. And as Putin's financial advisor said, all that America is doing is devaluing and washing out their debt in the clouds. What will most of the world want? It won't want an imaginary piece of Bitcoin, however well it's performed, or stable coins. They will want something stable like gold. Therefore, it will find greater support outside America and her allies with the BRICS alternative. The huge meeting of some 800 generals and admirals that the Secretary of War, Pete Hegseth, called for was a diversion. The real meetings were between the heads of CENTCOM, Pete Hegseth, and Trump on planning the coming attack between Israel and America on Iran. The next piece of information that came our way is that air tankers were seen flying into the Middle East via England. And the last time that this happened was prior to the last 12-day war on Iran. And then there are lots of other snippets that one picks up. Iran has made preparations for an attack. They have received extensive military equipment, both from Russia and China, and Israel's depleted reserves of missiles, etc., have been replenished by deliveries from America and elsewhere. So all the signs are that there will be an imminent attack on Iran within 6 months. There is a link between Ukraine and Iran. The link is that America would much prefer that Russia would not enter the war with Iran against America and Israel. So they want Russia to be bogged down in Ukraine, which means the probability of an escalation, implying that in one form or another, Europe will come into the war. Maybe not with boots on the ground, but maybe by air power. And you can see how troops are being maneuvered all around the place. I was told that about 56,000 US troops in Lithuania and Romania have been put on full alert in recent weeks. There are reports from Russian intelligence that contingents of UK and French troops have moved into Odessa and again activated in Romania. So there's a risk not only of an attack on Iran, but a significant escalation of the war in Ukraine between NATO and Russia. So basically, it's the powers that are behind Trump's presidency, whether it be the deep state, however you define it, plus it's the powerful old money, the elite neocons who want war. What drives copper is the macroeconomy. On our work, most of the world, particularly Europe and America, will be in recession until the early months of next year. The copper market is overbought. The bulls say, look at what consumption is going to do in future years because of EVs, renewables, data centers, electrification, etc. The problem is we live in a very fractured world, and past trends are not going to be the same as future trends. We're going into a world with very violent movements in business activity, both up and down. So we're either going to have an inflation-driven 2-year bull market starting around the middle of next year, followed by a big crash. First of all, though, we've got copper prices, for the reasons I've given you, falling to around $7,000. Then we would have a bull market that takes us up to 14,000, probably by second half of 2027, followed by the mega crash. The alternative scenario, and I'm not sure yet which one will play out, is that if the war scenario is real, the world will go into recession, despite whatever central banks and their governments will try to do to stimulate activity, because the war would unwind all of the highly leverage that exists in every market. And moreover, it's very likely that one of the first movements that Iran will do when they are attacked is to close the Hormuz Straits, through which 20% of world's oil passes through. So either we will see the top in the copper price today, or else we have a nice correction and then one last big move higher to around 14,000 into the second half of 2027, followed by the crash. So again, the copper content, the data center, is being reduced. Finally, you should look at the cost of money. The advocates of data centers are pouring billions, if not trillions, of capital into them. We are likely to see, under any scenario, other than a short-term drop in the cost of money, particularly 10 years plus, from around about the 4.5% now to about 3% by the middle of next year. But after that, the cost of money is going to rise very significantly in line with rising inflation. So you can see by 2027, 10-year treasuries yielding at least 8%. What does that do to these big guys borrowing money? So I think there are huge question marks about this bubble in data centers, which comes back once again to copper consumption.